All right, thank you everyone, and good afternoon, and welcome. I am Nicole Marin, the Congressional Hispanic Leadership Institute's Director of Programs and Internships. Before we start today's program, there are a few items to discuss. First, we ask you to help us share the speaker's points of view as well as your own. So please be sure to follow us on Instagram and on X at the CHLI. After each panel discussion, there will be time for questions and answers. The discussions, including the questions and answers, are being live streamed through FIU's YouTube channel. The discussion is also recorded, and you can view the program again later and share it with others. It will also be uploaded to CHLI's YouTube channel, where you can go back and view it after the program. Now, I'd like to kick off the program. Welcome to our CHLI Congressional Public Policy Briefing. The Congressional Hispanic Leadership Institute is the premier organization founded by members of Congress to advance the Hispanic community's economic progress with a focus on social responsibility and global competitiveness. Founded in 2003, CHLI is a 501c3 nonprofit and the only bicameral and bipartisan Hispanic-led and Hispanic-serving nonprofit based in Washington, D.C. CHLI is dedicated to fostering a broad awareness of the diversity of thought, heritage, interests, and views of Americans of Hispanic and Portuguese heritage. I would like to recognize our Board of Directors and Advisory Council members present before we start. I think I saw Ruben Barrales with Wells Fargo in the room, so welcome. And for those, I'm sure they'll be arriving later, so welcome and thank you for sponsoring our briefing series. Our year-long public policy briefing series sponsors are Amazon, Capital One, Charter Communications, Chevron, Citi, the Coca-Cola Company, Coinbase, Dell Technologies, Dominion Energy, Edison Electric Institute, Gates Foundation, Green Hills Software, Opportune, Pacific Gas and Electric Company, Pfizer, ServiceNow, and 2042 Media. Thank you for your support. And I also want to take an opportunity to thank the CHLI team today as well for their work in putting together this program. Marianne, Bree, Angela, Sofia, Andres, Stephen, Bruce, Talise, Aisa, Mercy, Tia, and Maite. The CHLI Congressional Public Policy Hill Briefing Series provides a platform for an in-depth dialogue on current public policy issues that affect the U.S. Hispanic and Portuguese communities. These are briefings to educate and inform members of Congress, their staff, and Hispanic communities across the country. Today, we will be discussing finance and how to build economic resilience. We will learn more about these topics and how they are connected. There are many times that we don't pay attention to certain details in legislation because it does not impact us directly, or we sometimes think they don't. This is a chance to dive into legislation and get a different perspective. Our guest speakers will provide that insight as well. Please take time to listen to all the different perspectives shared today. Before starting the program, however, I would like to take a minute to promote one of our partners, Catch Skills. Catch Skills is all about making learning count, no matter where or how it happens. We all pick up skills in different ways, on the job, through training, in school, or even from everyday experiences. Catch Skills is a platform that helps people track and showcase their skills, formal or informal, so they have a complete picture of their skill sets. If you see to the side of the room here, we have a QR code. It will take you directly to catchskills.com, where you can sign up and start tracking your skills today. It also has a pre-written log that will help expedite the process of summarizing what you learned in today's discussion. Now, I would like to introduce our FIU host, Carlos Becerra, for some welcome remarks.
Thank you. What a great intro. And here during this season of thanks, I want to start with a big thank you to many of our partners that I see out there in the room. But in particular, there is no more solid partner than we have in Washington, D.C. Than the Congressional Hispanic Leadership Institute. For decades now, I'll say, right? That is clear. And in particular, this past semester, helping shepherd Simon and Sophia, there you go, through an amazing set of experiences, and the rest of the CHLI Fellows, we're glad to have you here. So as we take pride here at FIU in Washington, D.C., We know we're the public research university in Miami. We're waving the Miami flag. Today's two briefings, I think, dovetail very nicely with Miami's role in the state, but also Miami's role in the region and our future, whether it be on finances and the role that the banking community plays in Miami. At FIU, we're proud, obviously producing so many university graduates as well as Miami-Dade College and University of Miami. But when it comes to that element of social mobility, I think that's something that we really take pride in because of our students. Thanks to the federal support and our Pell Grants, we're able to boost that economic success. And later on, we'll hear some of our energy-related projects that are funded by the federal government and with many corporate sponsors as well. But final set of thanks to, of course, our chairwoman, Ileana Ross-Leighton, someone that both organizations are proud to share as our madrina and really our active champion. And if it wasn't without her energy and drive, the future that we'll experience in the next few years wouldn't be there.
Continue.
And yeah. Well, with that said, I want to thank you all. We're looking forward to today's dialogue.
Thank you, Father.
Thank you, Carlos, for having us here today. Now, I would like to introduce our chairwoman, the Honorable Ileana Ross-Leighton. Chairwoman Ileana Ross-Leighton was the first Latina elected to the U.S. Congress, where she proudly served from 1989 to 2019, including as chair of the House Foreign Affairs Committee. Born in Havana, Cuba, she built a legacy of leadership in foreign policy, Hispanic representation, and supporting women in politics. She now serves as Senior Policy Director at Aiken and continues to champion Hispanic and Latino leadership as Chairwoman of the Congressional Hispanic Leadership Institute. Chairwoman?
Thank you. As a senior citizen, I'm very happy to be the Senior Policy Director at Aiken. But thank you so much. Good afternoon. This is as low as it goes, right? I need to grow a couple of inches. Good afternoon, everyone. Oh, yeah, that's another way. Buenas tardes.
Buenas tardes.
Thank you. And I am so honored to welcome you to CHLI's Congressional Public Policy Briefing on Finance. Da-da-da-da. Is that not a great graphic? That says it all. That's an essay in and of itself. Today's discussion comes at an important moment. The way we as Americans interact with money, how we save, how we invest, how we borrow, how we plan for the future, all of that is changing at a remarkable pace. Innovation across traditional banking, digital finance, cryptocurrency, I can't even wrap my arms around that, family enterprise, all of that is reshaping the pathways to economic resilience and long-term prosperity. We know that everything is changing at a fast pace, so why should finances be any different? But just as important is the growing emphasis on responsible technology and strong consumer protections. Public finance, transparencies, and safeguards against fraud, they all play a central role in building trust from the American public, ensuring that innovation enhances financial well-being rather than creating additional risks. These forces are converging to reshape the American economy in lasting ways, and it is essential that diverse voices and perspectives guide that evolution. And that is why CHLI brings policymakers and industry leaders together to foster a conversation rooted in access, in accountability, and in opportunity. So thank you to our panelists. Thank you to all of you for being part of this important conversation. I look forward to listening to a meaningful and engaging discussion. And now I am so pleased to recognize our fearless President and CEO of CHLI, Marianne Gomez, who is going to introduce our panelists. Marianne, take it away.
All right, thank you. I think all my notes are up here, right?
Yes, we just have to flip some
Yeah.
pages.
Okay, hold on.
Sorry, I got you off kilter.
Yeah, Nicole and I are fighting for the pages. Let's see here. We have, so just a note, part of it is that Congressman Henry Cuellar was going to come by. He just got called for votes. So I think we're just going to skip here. Oh, they moved him. Okay, let me do this. They're not join you here, but let me properly introduce everybody. Let me properly introduce, yeah, from here. Okay. All right, thank you. Here we go. All right, so I'm going to mention the different names of the panelists, and as I do, just coming up, save me this little spot here so that I can be on the level playing field here with you for the actual discussion. Okay, so everyone, Darren Carter is a Web3 advocacy manager at Coinbase, where he works with crypto founders, industry associations, and Web3 community partners to coordinate advocacy efforts, develop educational materials for policymakers, and promote the real-world use cases for crypto and Web3 technologies. Prior to his current role, Darren was a member of the Coinbase Giving Team, where he focused on increasing education and access, accelerating open source development, and expanding crypto talent. He believes in the power of crypto and Web3 to create positive social impact, financial literacy, and inclusion across the entire tech and finance industry. He has close to 10 years of experience in security, risk, and compliance, and a master's degree in digital assets from the University of Nicosia. Is that right?
That's correct.
Okay, all right. Please join me in welcoming Darren. Next is Meredith Shields. She brings nearly 2 decades of invaluable experience in the investment world, having dedicated her career to investing and supporting early stage and middle market companies across private credit, private equity, and venture capital. For the past decade, she has been at the forefront of the intersection of venture capital and social impact. Currently, Meredith leads the City Impact Fund in pioneering $500 million initiative born out of the belief that venture impact investing can play a crucial role in advancing economic opportunity for underserved communities. Under her leadership, City Impact Fund makes direct equity investments in double bottom line U.S.-based companies that are applying innovative solutions to address pressing community challenges. The fund was notably the largest of its kind by a bank, investing its own capital when it launched, showcasing City's commitment to leveraging its balance sheet for positive social change. Prior to joining City, she led the early stage catalytic investment portfolio for the Sorensen Impact Foundation. And she served on the U.S. Impact Investing Alliance's President's Council and the Global Impact Investing Networks for R3 Coalition. Welcome, Meredith. Next, Mariana Martinez. Dr. Martinez is a senior family dynamics consultant, executive director for family wealth and cultural services at Wells Fargo. She works with individuals, couples, and families to provide wealth education to help them with their goals around transitioning wealth across generations, providing specialized advisory services in family dynamics, education and governance, family and business history, and strategic philanthropy. With more than 25 years of experience in family enterprise consulting, Dr. Martinez advises clients on effective communication and decision-making strategies, educating and engaging the rising generation for wealth stewardship, preparing for family business transitions, and supporting the evolution of the family businesses. Thank you for joining us, Dr. Martinez. Next is Ezra Garrett. Ezra is the Senior Vice President of Public Affairs and Impact at Opportune, a mission-driven financial services company that puts its members' financial goals within reach. With intelligent borrowing, savings, and budgeting capabilities, Opportune empowers members with the confidence to build a better financial future. Opportune has been certified as a community development financial institution known as CDFI since 2009 and is driven by a mission to provide inclusive and affordable financial services. Opportune has provided more than $21.3 billion in responsible and affordable credit, saved its members more than $2.5 billion in interest and fees, and helped its members set aside an average of more than $1,800 annually. Prior to joining Opportune, Mr. Garrett spent 13 years at Pacific Gas and Electric, one of the nation's largest energy utilities, serving in senior leadership roles, including Chief Sustainability Officer and Vice President of Community Relations. Ezra also spent 2 years at Target, leading community relations for the Western United States. Mr. Garrett holds a Bachelor of Arts in Political Science from UC Berkeley and serves on the boards of the American FinTech Council, Leadership San Francisco, and the Public Affairs Council. Again, a round of applause for Mr. Garrett joining us. And I think he also came in from the furthest, right? San Francisco? I think he won. You won that round. Okay. All right, so hopefully, let's just test the microphones, make sure we all can. Everybody's good with that?
Buenos tardes.
Okay, buenas tardes, there you go. All
Hello,
right,
testing.
get them as close as you need to, so we're all ready to go. Okay, let me start with this conversation here, so. A couple of things that we're going to start with questions for each individual person based on their expertise. And so I encourage all of you to jump in if you want to add to it. We want to make sure that we have a very robust conversation, and then we're going to open it up to questions and answers. So as time comes up, please pause and jot down what your question is. It could be for all of them, or it could be for one of them. Again, we want to have that time to have that expertise. I do have to say very quickly before we begin, the moderator for the discussion was going to be Justin Velez Hagen, who is a doctorate in economics and an author of 2 books, and he's also currently the Deputy Chief of Staff for Governor Youngkin. Unfortunately, they had a family emergency with one of their daughters, so if you can keep the little one and the family in their prayers, so Justin isn't able to join, and so I wanted to make sure that you all knew that to keep them in our thoughts. But he gave me the script, so I already got it. I already know what to say. So, all right. So I'm going to start with Darren. Okay, how can emerging technologies like blockchain and digital assets expand economic mobility and financial inclusion for Latino communities, especially for what we refer to as underbanked in the community? So, Darren, why don't you start us off?
First off, thank you so much for having me here. Again, Darren, I've been at Coinbase for 6+ years, and I've experienced firsthand crypto's opportunity to help the underbanked and really provide a financial infrastructure that extends beyond some of the barriers that traditional finance may have. In my role on the Coinbase Giving team, one of my proudest moments was when we initiated a grant to this organization called New Story, and what they do in El Salvador and Mexico and all over LATAM is actually help people get access to housing by using crypto as an infrastructure for digital payments. So the point that I really want to make is that crypto is an infrastructure, and the opportunity there is to do finance with a purpose. The purpose in this particular program was housing, and the communities that we were working with in El Zante were literally miles and miles away from traditional financial infrastructure, and the opportunity for them to get something like a mortgage was actually very immature and out of hand. So when we talk about reaching the underbanked with a purpose, this is what I'm talking about. It's giving them the opportunity to use digital financial products. In this case, they were paying using Bitcoin or stable coins on a monthly basis and affordable rates. But the opportunity existed because crypto is something that can be distributed across borders and is easily accessible to anyone with a cell phone. So we helped build over 160 homes. They pay their mortgage back on the blockchain, and the financial institution has the ability to immediately audit the repayment rate. And it's been really powerful because it allows that financial infrastructure in this mortgage product to actually extend to the El Zante community, where traditional finance just had other barriers to entry. Like maybe it's the algorithms that you use to actually do credit scoring, or the physical infrastructure, the banking infrastructure that exists in San Salvador. But crypto which is essentially just derived from cryptography, is a way to extend and rethink how financial services can be provided in a digital-first way across borders and in geographies that are that don't have the same type of infrastructure.
So just a quick follow-up. Did you see that what people were using it for? Was it for housing? Was it for a small business?
Yeah.
What was that mix?
Absolutely. So, and the reason why I love calling out El Salvador specifically is because in DC, yes, there's a huge El Salvadorian population here. And El Salvador has also been vocally very pro-crypto, but a lot of people are surprised to hear that up to 25% of El Salvador's GDP was actually in remittances. And Americans here today send over $12 billion worth of remittances across borders to their families. And obviously there's a last mile delivery issue and so on and so forth. But when you see the people actually get access to this version of digital finance, they're using it for food, for water, for housing purposes. Communities in need know what they need, and they were able to spend it on what they need. And we were able to come in and provide the financial infrastructure, and the organization that we work with helped provide some of the physical infrastructure. So they literally 3D printed these homes, so very low cost, and they also printed the homes with a tienda in there. So you see the community members go from a situation of informal housing where their children aren't going to school not because they don't want to, but because they have the real world issues of stable housing. And once you've solved that problem, you see a number of second and third order positive economic outcomes for them. And now because of crypto's ability to transparently do this and extend the financial infrastructure, we have families that are running at the ENDA, and we have students who are not only learning about crypto, but are now going back to school and investing in their education. So it's really about finance with a purpose, and I'm glad that crypto plays a small role in that broader outcome.
Okay. You just generated like 5 more questions for me right now, but I'll come back to that later if we have time. I'm like, wow. Okay, because it's still kind of new to me. So I'm going to go to Dr. Martinez. So one of the questions here for you, and particularly it's around family businesses. So if you can share with us a little bit the importance of promoting family businesses in the Hispanic community. I think that we talk about Latinos in general being very entrepreneurial. You kind of mentioned that as well in terms of the services. But if you can share a little bit more about that based on your expertise and the services that you provide.
Of course, I was thrilled to see that family enterprise is what is in the title of our meeting today, because often it's about businesses as if all businesses are the same. But we know that family businesses, starting very small, but then they can become very large, are crucial for the development of our communities. In fact, we know that almost 90% of all businesses in the US and I would say also in the world are family run and family owned. So they are very important. In our community, it's even in the Hispanic community, it's even larger than that, where almost some say 99% of the small businesses are family owned. They start with their own capital,
Right.
with their own labor force. So it's really a labor of a community, of the family and then the larger community, to bring these businesses into businesses that provide well-being for their families and for the larger community. So focusing and supporting small family businesses is crucial. It not only brings economic benefit to our communities, but they also serve as anchors sometimes of a community activity. So people gather around those activities. They bring back value to the larger group. They support others in the community, providing, of course, employment, but also the sense that they're growing together and they're
Right.
doing something together, and that they can bring value to each other. So really, this entrepreneurship mindset that we know it's very prominent in our community has just emerges in the family business space in a beautiful way, in a way that really supports the community. So Yeah, I'll stop
Okay,
there.
good. And coming back to that a little bit later too, I think we'll touch on it, but, and I mentioned it a little bit, right? We know the Latinos overall are very entrepreneurial. I was literally talking to somebody at another event last night. This is like reception holiday season, right? We go to like 3 different receptions on the same night here, trying to catch up with everyone and send happy holidays. But the other aspect was of family-run businesses, and then the whole other layer that I'm sure you deal with as well is the succession planning and, which kids get to do what. And we see it even on Wall Street, right, with all the different fashion lines, big family companies and businesses, right? They're trying to figure out who in the family is going to be the first one or the second one, and how all of that is navigated is really fascinating. So I'm sure we'll come back to that a little bit in the conversation here. So speaking of families and the underserved or underbanked communities, Ezra, this next question is for you, dear. So, from Opportune, there's been a lot in terms of technology and innovation. So, can you please share with the group what is that for Opportune? Historically, the communities have been underserved, but it seems that the technology and the innovation that's kind of in the space that you're in has really helped not just Opportune, but your clients, your services, and I believe you're also expanding services. So share a little bit of that with us.
Yeah, well, thank you for the question, and thanks also for including us and for convening the important briefing today. I did have a long commute, but it was worth it. The weather here, coming from California, that's going to take some getting used to. But thank you again for the question. So as a CDFI, Opportune, our mission is centered on access, providing responsible and affordable access to credit for traditionally underserved communities for underbanked U.S. consumers. And so it's really about trying to use technology so that we can say yes to somebody. I think most folks are aware that if you don't have a credit score, you largely can't even apply for
Right.
credit from a mainstream financial institution, which usually means that folks in that situation are going to have to pay really, really high cost in terms of interest and fees for access to a loan. And many times they need the loan because of an emergency or because they want to take advantage of an opportunity, like to buy, equipment to start a family business, as an example. So at Opportune, we use technology to get to yes. We look at over 10,000 data points to
Wow.
help to develop our own proprietary credit score. So banks traditionally will rely on the credit bureaus, and so someone that doesn't have any information in the bureaus will need to have other signals sent to us to let us know that this person is able and willing to repay a loan. So again, it starts with the technology, but it doesn't end there. So what I would say is that while we kind of hang our hats on innovation and technology to get us to yes, it's really not enough to give somebody a loan, especially if it's someone for whom this is their first experience with a formal financial services product. You can't just give them the loan and say, okay, well, you're going to have to pay us back, every month, and good luck to you. A lot of folks don't have the habits and skills that many of us take for granted to sort of establish the patterns that are needed. Or many folks, because they're underbanked, it's not going to be convenient for them to set up, recurring ACH payments. So a lot of what has driven our success has really been in the focus and attention that we put on personal servicing. So again, we're sort of a fintech, that's the term of art. We use technology to say yes, but we're very traditional and old school in many ways. We operate a very vast network, retail network that includes partners where folks can go and make a payment in cash at hundreds of locations across the U.S. A lot of fintechs, aren't able to offer that. And so I would say that, again, it doesn't start and end with access. It really just sort of begins the journey and understanding the community, being able to show up where they are. All of our agents are bilingual Spanish as well. So it's really taking a culturally competent approach to understanding not just whether or not they can repay the loan, but understanding, what are the things that you need to do to help them be successful with that product.
There's a lot of things. So thank you. I know that we'll come back to a couple of other points there, especially on the technology side. So as our chairwoman mentioned in opening the conversation, that we're also talking about responsible technology and consumer safeguards in driving the long-term financial stability, for an individual, a family, a business. So Meredith, this question is to you, dear. From your perspective, why are these elements, so essential in today's financial landscape? And again, kind of going back to our chairwoman's point about, I remember when I was in high school, I don't even know if they do this anymore in high school, but I remember in high school I had to take a class that included how to balance a checkbook. I don't know that I completely mastered that yet, but I don't even know if they teach that anymore in school. But you talk about like financial sustainability, just kind of understanding, to Ezra's point about credit scores, FICO, underbanked, underserved. There's just a lot in that area. So can you, as best as you can, kind of cover a little bit of that and share a little bit from your perspective?
Sure. No. Can you guys hear me? There we go.
Yes.
No, absolutely. So as we talked about a little bit, we are double bottom line investors. So we're venture capitalists who are investing for also social impact. With that in mind, we've been hyper focused on responsible technology, especially this year. So everybody in this room, I'm sure, pull out your phones. You have at least one LLM application, whether it's ChatGPT or Meta or something. That's the entire consumer economy right now, and it's driving consumer behavior, especially in financial services. That's exciting. That means that access, like getting to yes faster, is something that we're excited to be able to provide, but we're also a little nervous about the way that this trend is going. And so I'll give you an example. I had an opportunity to hear from a large fintech CEO recently who told a story that capitalized on the trend that this AI progression that we're seeing that's accelerating so quickly is truly being led by consumers, whereas other technological shifts have been driven very much by businesses, by engineers. This one is being driven by consumers on their own, finding new ways to use technology and then pushing the companies to meet them where they are. That's a pro and a con. So this particular CEO, he told a story. He found that his users were downloading and exporting all of their personal financial data, so aggregated credit card statements, aggregated bank, you know where I'm going here, aggregated bank details, and dropping that into their personal version of ChatGPT, and then saying, please tell me where I should cut my spending so that I can buy a house in 5 years or things like that. And those types of trends, he was explaining, his engineers can't innovate fast enough to meet consumers where they are, but they're trying. And that's what we need to do in order to deliver responsible tech, because of course it's not secure to drop all of your personal financial data into a personal version of ChatGPT, but consumers see the opportunity that lies in AI and in the power of bots and assistants to help you with such things. So we're hyper focused on that. So every investment that we make, we're carefully diligencing how the founders are thinking about that balance of providing access, but also being responsible overall. And then I'll talk a little bit about just in general, that those are the caveats, those are the things we worry about. The opportunity for AI to bring access and financial resilience is astronomical. I don't have to tell this room. Today, 30% of Americans are not financially healthy and resilient in the case of a catastrophe. And so when you think about what some of the new innovations that are coming out of financial technology can bring, it can bring things like helping people to thoughtfully save for a disaster. We're seeing some amazing innovations in insurance to be able to deliver, like for example, car insurance that enables payments not on a monthly ACH or credit payment cycle, as that could be inconvenient, but in other ways, and help people build that resilience. So we're really excited about the intersection of technology, but also being cautious in what we put in consumers' hands.
Okay, yeah, so I think that, One of the things that, to your point about it being more consumer driven, it's kind of like, oh, this is the latest shiny thing, and we all want to get in on it, and we start playing with it, and then we realize, oops, I don't know how to do the rest of it. So like there comes like that point where we're in it, and then we're not really sure, or we're trying to teach each other, and so it's just a lot. And I think that part of it has been also that as a Latino community as well, we over-index on mobile devices, on smart devices. We're cutting more and more the telephone landlines, and so we're just more mobile in that space as well. And so I think that there's always that balance. And I like to kind of use the example, or guess the analogy is that, in part of why we wanted to have this discussion with all of you is because remember when the internet was coming out and email was just coming out, and there wasn't a lot of policy related things regarding the internet or email or intellectual property or anything related to that. And we still haven't caught up even to that from a legislative standpoint. So, some of it is kind of learning what's going on and kind of helping each other figure this out as we also go. But to your point, Meredith, also really understanding from a consumer standpoint what we need to know,
And I'll just kind of double down on that, because I think we're so grateful to be here and to be able to have these conversations, because that point is exactly something else that we think about in broader cities. As we think about the speed and the progress of this technological acceleration, we can't have quarterly meetings and meet communities where they are. We really need to be consistently and intentionally sharing learnings, sharing feedback from the community, from the private sector, from the public sector, and working maybe closer than ever to make sure that products and services meet the needs of communities in a responsible way. And that bridge building, it feels like there's just a giant critical element around right now.
Yeah, we're definitely all in the bridge building these days. So the next question is over here to Mariana. So what are the most important obstacles that you see are family businesses in the Latino community to grow, prosper, scale? What are you running into?
Yeah, there are two main obstacles.
Okay.
One is access to capital, right?
Right.
Family businesses, small family businesses in our community are typically funded by the same family with their own funds, and that's a risky matter. So one of the challenges is how to access secure and stable capital for their ventures without having to put at risk their own livelihoods and their
Right.
Balancing that is one. But we know that our community finds more no's than other groups when it comes to access to capital, so that needs to be addressed. The second obstacle is the education and the learning, because having a business, even if it's a small business, require knowing how to handle a business. It's different than managing a household, for example, right? So learning and literacy around family business, about business in general, about finances, is another obstacle. So the two main obstacles are access to capital and education, preparing the next generation, etc.
So a follow-up question for you then, from a literacy standpoint, how do you advise people? I mean, maybe by the time they come to you, they kind of already have an idea of what they want, and maybe they are a little more knowledgeable than others might be. But so if you're just starting to figure out that whole financial literacy, for our audience here and virtually, what are some of the things that you tell people to do, or what's the homework assignment?
I would say approach your community resources. There
Okay.
are plenty of community resources where people come together and discuss what they're doing and what are best practices. They may bring experts. So learning in community is, I think, one of the best things, and you can advance some of your needs there. And of course, now there are so many resources available for free of charge about how to build a business, how to sustain, how to budget for your business, how to create a fund so you can address an emergency in your business, how to look into the future instead of looking at the very next week or month.
Yeah, that's
how
hard.
to plan for
Yeah.
longer term, etc. So there are resources there. So learning on your own, but also learning in community as a family and as a larger community. There are
Okay,
resources in
that's
our
good. That's important. And I know that there are, it's not something that, like a program that we have at CHLI, but I know there's a lot of other nonprofits that have connections, or, I know a lot of you do too, have connections with other community organizations that have those kinds of resources. Or like, I know in my hometown in Stockton, California, El Concilio has, monthly workshops or different conversations with people. They bring in guest speakers for people to kind of unpack that, because sometimes it can feel a little overwhelming.
They even have some of these organizations provide individual guidance. So you bring your situation to
Yeah.
somebody who can help you with some pointers, and then come back and review,
Good.
etc.
Okay. Ezra, going over to you, dear, next. What are some of the other factors beyond the technology that we kind of talked about that you think are playing a significant role in how you reach and support different customers in their financial journey? We talked a little bit about that FICO score, and how some places are also trying to figure out creative ways to maybe have like a different kind of FICO score, but also just kind of people help them through like that muscle memory of this is what you need to do in order to kind of figure out a FICO score.
Yeah, it's so that's a great question, and it really comes back to sort of what you were discussing around financial education.
Yeah.
Some folks actually got that in high school. I can tell you that, that my nieces and nephews in high school, if someone tried to teach them how to write a check, they'd ask you, what is a checkbook?
Oh, that's why I said, I don't know what they learned from a finance perspective in high school now, but yeah.
So even for those of us that kind of had those opportunities, everything is different now. And so for a person who's coming into a financial product for the first time, who never had an opportunity, it's completely foreign. Almost like learning a new language, I think, in some respects. So I talked a lot about how technology enables us to say yes. I talked about how we have sort of servicing programs in place where we can, really support and interact with our customers. We take payments in cash. We do it on a biweekly basis, so it's more affordable. But on top of that, we feel it's really important to provide access to financial coaching, which is a
Okay,
little bit
that's
different
good.
from financial literacy, so to speak. Financial literacy, that term of art really applies to, you're kind of like having someone sit down and teach them the lesson or give them paperwork to read. Financial coaching is a really much more hands-on approach where they're working with a third-party expert, not an opportune person, where they actually get a chance to be guided through the process of, understanding their obligations and commitments, understanding what their income is, understanding how to build a budget, understanding how to make a plan for something that they want to, acquire or purchase in the future. So we've offered free financial coaching to all of the people that come to Opportune, whether they're accepted for a loan or not. And we do that through a partnership with Unidos US, which is many of
Very
you know.
good.
is
Yeah.
a-
As I mentioned, different nonprofits have different services, so that's great.
Yeah, and so we think it's important to connect folks to a service provider that we can trust is going
Yeah.
to take care of them, who can serve them in the language that they prefer, and who will also, help guide them, so that they're not just successful with our loan product, but they're taking advantage of the other opportunities that come with that. One of the things that we do with all the borrowers that we serve is we report them to the credit bureaus so that they actually get credit for positive performance. And then they can go on to, other opportunities as well, like a home mortgage or a bigger, auto loan, that sort of thing. So, so I'll leave it at that, but really it's not just servicing, not just saying yes, but it's also connecting people with experts that can help really guide them so that they're enhancing their understanding of how this all works and how to take advantage of
So
this.
just to kind of circle back a little bit on that. So the financial coaching, a little different than the financial literacy piece. How long have you been doing that?
I don't know about since the beginning, but since 2006.
Yeah.
So the company was founded in 2005, but very, very early days. We actually supported legislation in California that strongly encouraged licensed lenders in the state to offer. They don't have to provide it, but they have to just at least offer it.
At least offer,
Yeah.
okay.
So,
very good.
yeah, so it's been,
Okay.
it's
So,
part of what
you
we
have
do.
you have customers that have been doing this for quite a while then, or at least have had the opportunity to do that for quite a
Yes,
while.
absolutely, absolutely. In fact, a lot of the folks who take us up on it are not customers. A lot of the folks
Oh,
are
really?
people who were not approved for a loan. We
Okay.
still offer to them, and a lot of times those folks will come back, and they'll be approved down the road because they've been able to get coaching on what are some of the things that they can do to kind of build their sort of credit profile, so to speak, so that they have more headroom, for example, in their monthly obligations to afford to repay a loan.
Okay, that's good. So it's helpful to have, again, like the whole financial literacy piece, the coaching, whatever it might be. And sometimes it's really helpful, like in other things in life, to have a third party person help you out. And it's not like your mom or dad or your tío and tía or somebody else, because their perspective, it could be a little different, right? So it's kind of nice sometimes to actually go to like an organization and a formal structure, at least, that kind of gives you that little bit of a different comfort. At least I'm thinking of my own family, because if you're first generation, if you're the first one to go to college, you're supposed to know everything. You're supposed to be able to answer every question your mom and dad have, right, about everything. And you're like, I didn't study that, Mom. I studied something else, right? So I've had a lot of those conversations with my dad, trust me, especially when he questions me why I didn't go to law school. And I'm like, okay, that's a whole another conversation, Dad. Yeah, I know. Meredith, this next one is here for you. So talk to us a little bit more about the City Impact Fund and its approach to responsible innovation, kind of a little bit of what we had talked about before and kind of adding to this whole accountability, personal responsibility, all of that piece.
Yep, sure. Can I first though comment on the financial
sure.
coaching and double down on? Gosh, I love everything you're doing. We're like Opportune, we also think financial coaching, financial literacy is incredibly important. And one, like back to my beating the drum on technology, it's my day to day, is we're excited about the opportunity that technology has to embed financial coaching into financial services that exist. So, an example is one of our portfolio companies is a company called Clerky. And in fact, Guy, the founder, he just moved here to DC.
Okay.
He created this company because he had a number of different credit cards and realized there's no can't pay button. Like you either pay the minimum balance or you don't pay or you pay over it. But there's no I can't pay, help me. Like you call, you spend a lot of time on the phone, you try to figure it out. So his company is trying to embed some of that financial coaching element around they're using AI to look at spending habits, and they can look as far back as the financial institution will give them, and then recommend to a consumer, okay, you have indicated that you're having trouble paying this month. Here's what I can see. Like you have one credit card with a 15% interest rate and one with a 20% interest rate. Let's do $5 here and $4 here. And by the way, we need to renegotiate like this subscription that you have or whatever the case.
Oh, interesting.
And
Okay.
it can do all of that like within a couple minutes. It can pull together, and then they use human in the loop.
Cool and scary at the same time.
It is, which is why people have to be
Yeah,
it's
yeah.
unbelievable. But people have to be involved. So back to like you
Right.
need to know your community, know who you're talking to. So they use a human in the loop philosophy too. So an actual person is available to walk you through the recommendations of the system. But agree, like a financial coaching aspect is just so important to resilience. Okay, the question that you asked, how does the City Impact Fund think about things, responsible investing? So again, we have, and I've been in impact investing for the last 10 plus years. I think the way that City does it, and the reason I came to City is because they're taking a really unique approach. And that's A, that we're using our own money, we're using our balance sheet, but B, I kind of report up through two sides of the house. I report to finance and I report to the head of our community investing and development.
Oh, okay.
And so I really do have two goals from two important parts of the organization, and that's to invest in viable business models that are doing great things for the world. And then I have KPIs for both of those. So we built a system and a process that enables us to invest in those types of companies, which there are more than you think, right? Like the one I just mentioned is a great example. The more every dollar of revenue that Clerky generates enables somebody to better manage their debt. We invest in companies that provide like access to better health care for seniors in rural areas. We invest in companies that help provide child care to working families and adults. We just invested in a company that is filling a gap in estate planning and grief support. So, this is something that we see across the communities we serve where the loss of a family member, particularly in the event of a family owned business, can be catastrophic. And so, this company is using technology and human in the loop, like real people as coaches. To provide estate planning and settlement services to families who've lost somebody recently and try to avoid that catastrophic financial and mental health impact. And so I give those as examples because the way that we approach it is for every company we look at, we first and foremost look at who they're serving. On my team, we invest in solutions directly for underserved communities. So these are communities across our country that are experiencing market failures or market gaps in access to things that they need in order to prosper. And so that cuts across access to jobs, access to education, access to economic mobility and financial resilience. So the second thing that we look at is what is the company doing? Like how are they reaching communities? Because there have been a lot of examples in history of companies that are good, but we're looking for the companies that are doing good. And so like to have intentionally designed a product or a service that is solving for this market failure or market gap being experienced by underserved communities. And then the last dimension, and the reason why we're venture capital, is what we call our type of investments, is because we want big changes. We're not looking for a small change that only helps 100 people here and 100 people here. We want to change the game and create a better system overall. And so our third dimension is how much does it help? And so if a solution, I mean, we look at 1,000 opportunities a year, literally. A lot of them have a marginal potential impact. We're looking for the ones that have a big impact, like creating financial safety nets, enhancing affordability to things that you need. Those are the types of things. And then negative externalities. So be remiss in this AI world if I didn't talk about this. We can get so excited about different innovations and things that come along, but part of our process is to always question who loses. When something new comes about, who wins and who loses, and we think it's our role as an impact investor, but also as part of a global financial institution to make sure that we're hyper mindful of that and trying to mitigate further expanding the wealth gap, further expanding disparities that exist.
So, do you also help people scale, or do they have to show up at a certain level already?
Oh yeah, no, that's the favorite part. So we hope to come in early when they have about $1 million in revenue. We're not the earliest, but when Citi can come in at like around 1 to 10 million in revenue, that's the point at which we can bring our network of 250,000 employees around the world and our expertise globally to help companies to scale. And so examples of that are we have five of our companies today, we have actually become clients of theirs. And so that can become rather game changing. At the same time, they're helping us to better serve our communities. Other ways that we support and help is by enhancing their visibility. So we put our founders on our stages. I think the stat is that every single day of the year, there is a Citi event going on somewhere in the world. And so my team, we try to get our founders and their innovations out in front as much as we can. And then importantly, any area where we can lean in. So if we're investing in a fintech, we know a lot about compliance. We know a lot about how to scale responsibly. We have an amazing employee network of folks who want to help,
Cool. All
and
right.
so we can bring that power into. But yeah, we want to see them grow.
Okay, that's good. That's good. So thank you. So the next question is for Darren. So there's been a lot of conversation about crypto, stablecoin, Bitcoin. I'm sure I'm missing something, but yeah, there's a lot of layers to it. Can you please share with the group in like very simple terms, Darren? Okay, don't get fancy on us. Okay, very simple terms about the landscape from a regulatory standpoint in regards to the crypto and digital. I think there's committee meetings going on both sides, on the Senate and the House. There's also at different state level also trying to figure out what to do. You talked about the use in other countries. So if you can give us a little bit of texture as to what are some of the policy type of conversations maybe that you're having and what people need to know about so that they can also be engaged.
100%. This is such a phenomenal question, especially for this particular time right now. And before I do hop into the question, I do want to also acknowledge the fact that some of the themes that we've been hearing earlier today are, one, the pace of innovation that we're experiencing today is like we've never seen before. The importance of education as a foundation for adoption, and also just being cognizant of what the externalities are with this new technology. Crypto has been around for years and years. It is something that U.S. Congress over the past 2 congressional sessions have really taken seriously. So in the last congressional session, there was a bill called FIT 21. This essentially helps define and regulate digital assets broadly, and digital assets in crypto, I'd say, are somewhat synonymous. And it passed the House with tremendous bipartisan support. Over 71 Democrats in the House had voted for it. Unfortunately, the bill itself didn't get passed into law, but it was also the foundation for what we're seeing literally today in the Clarity Act. And the whole goal is to help everyday consumers understand what are the rules of the road here. And when you're interacting with this new technology, like how are things defined as assets? What are the rules for centralized entities like Coinbase? What are the proper disclosures and the ways for people to responsibly interact with this new technology? And a lot of my work that I do at the federal and state level is educating policymakers about what is the technology and what are the use cases. And I think the reason that education is so important is that without education, you can't have responsible adoption. And there's this phrase that says, a rising tide raises all boats, but only the boats that are in the water, right? Because if you don't have the proper education, that rising tide will actually sink your ship. So I think that that's why it's so important for us to get the order of operations correct. And right now, we've been doing a lot on the Hill to educate policymakers about digital assets, the future of innovation here in America. And now the Senate is engaging in a bipartisan process in Senate Banking and Senate Ag to help advance what the House had passed in Clarity.
Okay.
So literally, maybe in a couple days, they might notice for a markup, which would be very exciting. We see some momentum there. But I'm most encouraged by the engagement from members in their offices to really dig into these issues, because crypto is very broad and it's very complex, and it spans the gamut from crypto as infrastructure to crypto as digital assets and everything in between. And it's something where we also want everyone's views reflected. This is not a partisan issue. This is a technological issue. And as you were alluding to earlier, this next generation, they're not learning how to balance a checkbook and do everything that our generation may have been taught. They're all digital natives, right? And they're moving at a pace that is just so quick, and it's all consumer-led. So they're going to continue to interact with these technologies, and it's our responsibility to not only educate the consumers on how to engage with this, but the policymakers to get the policies right. Because we also start to see a lot of this innovation, at least in my industry, moving offshore. And the danger in not having a regulatory light here in the United States is that it doesn't create an opportunity for compliant founders who want to do good and be good to step into the light and step into light and say, we're doing things the proper way. So over time, you start to see foreign companies still engaging in this activity, the consumers still demanding that technology, but the standard that these foreign institutions are holding themselves to may not be reflective of American ideals or values, and that overall doesn't serve well for consumer protections.
Yeah, so, and also just because it's a global economy, right? So again, going back to the days in high school when I had to learn how to balance a checkbook, we didn't have smartphones, we didn't have email. I'm really dating myself now, but so because of the globalization of everything, right? Personally, business, policy wise, now we're in a phase where we also check to see what other countries are doing.
Yes.
We didn't always do that, for the good or otherwise, right? We didn't always check to see what other countries were doing or how they've evolved in a certain category or a certain, industry or what have you. So it's again, there's a lot of layers to that, but
If I may double,
Yeah, go ahead.
If I may double down on that point, the U.S. currently is behind in creating legislation that will, eventually allow for regulations, and it has been years and years and years of advocacy and education that the industry has been engaging in that has brought us to this point. Obviously, we're very excited, but we need to continue to lead on this. The world is looking at the United States to establish clear rules of the road for this industry. And I remember over 6 years ago, I was actually in the Mission District of San Francisco when I had first learned about crypto. And I looked across the street of Mission, of Mission Street, and I noticed a very, very long line of people waiting to pay a lot of money and wait many days to send money to their family. But I also observed a huge tech ecosystem of Google engineers and
course.
Salesforce engineers who are all excited about the future of innovation. And it was just amazing, well, not amazing, but it was almost disheartening to me to see just how wide the gap was and the realities of over here on this side of Mission Street and over here, where all the tech people are living and thriving. So that's where I had started my journey to learn about this industry, and why I decided to ultimately, join Coinbase, which is a U.S.-based company that has gone public and is engaged with our regulators and with our legislators to push for rules of the road for this industry, so we can allow those good actors to step into the light.
Okay, good. This is my last round of questions. I think this is my last round, or do I have one question for everybody? Because I know we started a little bit late and we want to make sure we have time for questions and answers. I need to stop to do Q&A at 3:50. Where am I? Okay, I only have a couple. If you don't mind, I think I'm going to go to the question for everybody. And then we'll, if we didn't get to the last questions here, please make sure to incorporate in your answer any legislation that people need to be aware of. That's always really important, in these conversations. As Nicole said in the very beginning of the discussion, is that we're here and we're having this conversation, and it is being live streamed and it'll be recorded and made available later. But sometimes we kind of get into our DC jargon, and so we just want to make sure that people understand what legislation they should follow or what is going on the Hill. And so I'm going to kind of just go. Actually, why don't we do that first, and then I'll ask the question. So Ezra, why don't we just start with you, dear? Is there any specific policy, legislation that's out there now that your team is working on that people here in the audience should know about?
No, there isn't one specific piece of legislation. There's like 100 of them, but it's all sort of.
We don't
in
have
the,
all day, sweetheart. So
Right.
just gotta narrow it down here. Narrow it down.
Well, so what I would just say is that, Robin, you spoke about the importance of innovation, and as innovators, we understand that this puts pressure on policymakers to keep up with us in terms of, putting rules of the road in place, putting guidelines, putting frameworks in place that folks can follow, and that within which consumers can be protected. So I'll just say two things about that dynamic. Number one, we understand, but we want regulation. We want to know the rules of the road. We're asking for it. We support it. We'll discuss it. We'll adopt it, because whether we debate along the way about the right way to put the regulations in place, we fundamentally want most regulations that everyone can see and follow, and we can hold ourselves accountable to, we can hold each other accountable to. So that's the first thing. The second thing I'd say is that as we think about big policy ideas for big new things, it's also important to recognize where there may be robust regulatory oversight and enforcement by federal regulators or by state regulators. So I'll just kind of pick on the AI space and financial services. It is appropriate and understandable that a lot of attention is being put into putting safeguards around the use of AI and automated decisioning systems. It is also true that in the financial services space, biased and discriminatory credit decisions are already illegal and are already enforced in a very robust way, both at the federal level and also at the state level. We're based in California. We have a very aggressive and proactive state financial regulator as well. So again, I'm not saying that financial services companies should get a free pass, but know that we want to see good, robust regulatory oversight. But we also want to make sure that we're not adopting things where overlaps between state and federal, or even sister agencies at a certain level, where those overlaps may be in conflict with each other or may be duplicative.
Okay, all right, good point. Dr. Martinez, how about you? What are you seeing in terms of policy or things that we need to know about from legislation just to be aware, especially in the area of your expertise in family businesses or any other aspect?
I'll go back to the point of access to capital.
Okay.
And making sure that there is fair treatment in all of these groups where capital is harder to have access to. So just the awareness of that problem that happens out there in the streets.
Okay, all righty, thank you. Meredith?
I just comment on a theme that we've been tracking is something that I mentioned earlier around responsible consumer usage of technology, especially financial technology, and tracking. We've been tracking closely the products and services being developed and how people are using them, and watching for potential issues there.
Okay, are there any agencies that you work with, federal agencies or commissions, anything like that people need to be aware of, or kind of, if they want more information, where can they go?
I would defer that question to our government affairs team. Kylie's right here in the room.
All righty,
so
we'll come
catch her
back to that.
afterwards.
And same coming back to that same question here too for you, Dr. Martinez. Is there a particular federal agency, any other place in particular that people can go to and get more information if they want to get that?
I'll do the same.
Okay, all right, so we'll have to come back to the government relations people. You've already been queued up. You got to be answering first before we get to questions. So you already mentioned it a little bit, but what's the legislation that you were talking about? That's on the House side, right?
So on the House side, it was called the Clarity Act.
Okay.
And then now that product has moved to the Senate, and the Senate has their own product that they're getting ready to produce. But touching on the themes from before, as I think you also shared about the risk of regulation by enforcement, and obviously the industry has experienced that over the past couple
Right.
of years because the rules have not been clear, and it's not clear where certain entities aren't or are not breaking certain established rules, and where regulators have certain authority. So in our space, a majority of the conversation is about, is it the SEC or the CFTC that should be regulating the markets of these activities? What is the definition and the taxonomy of these assets? And it creates a lot of...
So back up a little bit. What was the alphabet soup? So that people understand who don't understand
you
it.
can tell I
Yes,
work
okay,
in crypto
yeah, exactly.
because of all the
So,
jargon
yeah,
here.
So
the Securities and Exchange Commission, as well as the commodities...
you can't even remember what it says it so fast.
Yes, Trading Commission. Thank you. Are the two primary regulators that will
Okay.
likely have domain over this particular part of the digital asset space.
Okay.
And it is the role of Congress to help them understand where their authority starts and stops, and how those markets should be regulated, and which actors should be regulated.
Okay.
And Coinbase and all the other institutions here in the United States all now seek out state clarity. So we have money transmitter licenses in all of the states that we operate in. With NYDFS, we have our BIT license. In California, we have a similar certification that allows us to operate within the state. And for this space to continue to grow, you do need a consistent and clear federal framework that'll define this across, all. Because you were alluding to, this is, global finance,
Right, exactly.
digital products. So right now, like literally right now, I know the Senate is working on draft text for their version of the market structure legislation. And then earlier this year, there was a bill called the Genius Act that passed in a bipartisan fashion, one of the very few, bipartisan pieces of legislation this year, and that helps define stablecoins. So that is like a digital dollar on a blockchain backed by a United States Treasury asset. And that's hugely important as well because we want people to have the ability to use a dollar with the convenience of Apple Pay, but the affordability of email. That's what that does.
Wow, there's just so much going on in terms of the technology and the innovation. So, okay, who was it that we needed to hear from first? Who's in the audience to answer the policy question? Who is the GR folks?
The bus stops.
Dr. Martinez, who's here from your GR team?
Ruben Morales.
Okay, Mr. Ruben Barales. So, Bree, give the gentleman the microphone. So what's going on that we need to know about? What are some legislation?
Well, I won't get into the legislation generally, but I think from the regulated financial services industry, the balance is just to make sure that as these new opportunities come online, these new technologies, that there's a balance. We have to, there's so many regulations that we have to abide by to make sure that deposits are guaranteed, that we have a certain amount of money in the bank, literally, compared to how many loans we let out and all that. And so the ease of cryptocurrency and the like, it's stablecoin, it provides great opportunities. Just want to make sure that that those safeguards are in place so that folks don't lose their money, their life savings in some way.
Okay, all righty, good. And was there somebody here, Meredith, for you to respond to the?
Kylie Patterson is right there.
Okay. Nicole, if you can pass it on to the young lady over here in the front. Thank you.
It's so funny because I grew up in a Baptist church, and whenever you're a visitor, you have to announce yourself to everybody in church. So, hi everybody.
Not here
I'm
in Chile.
Kylie Patterson, my first time.
I'll just find you, dear. Don't worry about that. Don't worry about that. Yeah. We'll find you, dear. Okay, so what's going on policy-wise? What do people need to know?
Yeah, ditto to everything that was shared. But one thing I want to lift up is around housing, and we didn't talk. The conversation didn't really go into that, but there were some provisions that were included in the One Big Beautiful Bill, which should accelerate multifamily affordable housing and housing access. And now the real question is making sure that actually comes to fruition.
Okay.
So looking at ways to continue to make improvements and amendments to it so that it gets the outcome that we want, which is, from most estimates, there's somewhere between 3 to 5 million homes that are needed, and that right now there's a huge gap. So looking at solutions around multifamily as well as single family so that more people can buy a home and be a homeowner and build wealth, I think is really going to be a primary conversation over the next several months. And we've already seen that kind of ambition from the administration and from both sides, both chambers as well as both parties. Okay. So I'm excited about what that looks like and what we can do together.
Okay, thank you. And so now open to questions. Who has some questions for either all the panelists, individual ones? Over here in the...
Hi. Yeah, great conversation. I was curious about, we talked about like trying to set up families to pay their mortgage, but at the K through 12 level, what kind of digital tools are we, I guess, young people using now to kind of help parents monitor their spending habits, behavior? I think it's, when you think about just about a month with people not having SNAP benefits, clearly, that doesn't make any sense to me. But when you look at the spending habits of kids in schools, spending lunches and stuff like that, how is there any cross-section with digital tools helping family members or even state elected officials kind of build more policies on how to, make families more successful financially?
Anybody?
I'll get us started, and then
Okay.
I'll obviously pass the mic to the rest of the phenomenal panel here. I will say that crypto is honestly at a point where it is challenging for people to immediately hop in responsibly because it's also not only at the intersection of financial literacy but like technological literacy. So we're doing as much as we can to continue to educate the community. Even adults have sometimes, an issue trying to really understand the digital asset space. But I'm so happy that now that we have clear rules around stablecoins, we're finding that to be the best point of entry for communities that want to understand the opportunity of crypto and digital assets with the safety of the US dollar. And one thing that we've done in New York City specifically, Harlem and the South Bronx, is work with Give Directly, which is a nonprofit, to issue a program for digital financial resilience. And they're specifically focused on the 16 to 25 age range because they find that that is the age range where you can have a material impact on the trajectory of a young person's life. That's when they're making big life decisions about, are they investing in their education or going to college, or what does like the future of their financial housing stability look like, things like that. And we, Coinbase, play the role of infrastructure provider, and they play the role of experts in administering the aid and understanding how to actually work with the community. So I think that you're going to see, at least in our, in our circumstances, it's best when you collaborate. And the tech company, is an expert in the tech piece, and then you also have community organizations or CDFIs that also have their own particular expertise, and together you have better outcomes. And the theory of change around this program is the fact that if you can give people a lump sum payment after they've been able to establish a particular credit history, that provides more financial resilience than every month here's enough money to just make it to next month. And that's what we like to see, and that's how we're supporting families in their financial resilience journey. And it's usually administered to that 16 to 25 age range where they're responsible enough to be earning and spending their own money, but also it's a time in their life where you're actually going to have a material impact on their trajectory overall.
Thank you. Anybody else want to contribute to the answer?
I just say, something that child savings accounts. So I think it was probably 20 years ago, Citi was a big proponent of administering child savings accounts in a couple states across the United States. That concept has become a little bit more popular, and then layering on top of that technology advisory and coaching, like we talked about. We've seen a number of startups that are directly targeting teenagers and parents of young children, trying to set them up for success. It's really hard to build wealth in this country right now, and so how can we educate but also create products and services that enable families to start saving for their children, so that when their children reach adulthood, that they have something to work with, some sort of safety net.
All right. I'm gonna check. Do we have time for one more question? Just one more question. There's one back. Is there one up here?
Wait, so we need more.
Yeah.
Good afternoon. My question is for Ezra and Ms. Shields. When you talked about like giving the opportunity for people who get rejected for loans and stuff, I suppose you guys use like AI and different tools to see all the different characteristics of why they got rejected and why they could be accepted with you guys. And I want to ask if big banks like Citi and Wells Fargo are maybe using those ideas to maybe bring more people in. That's my question.
So a couple of things. One, I'll start with just specific to my team. An investment that we made 2 years ago is a company called Prism Data, a really neat company based out of New York. They spun out of a a credit card that was also a startup. And so they had 10 years of data to build a proprietary credit modeling, and it's cash based. So they use Plaid to look at your cash inflows and outflows, and you might not have W-2 income. You might have a gig economy type income, and so with their algorithm, they can better predict your ability to pay what amount of loan. And so innovations like that are ones that my team has been really focused on looking at, and I know are of interest across the banking system too.
I would completely agree with that, and I would say that the use of AI really is what allows us to look at the 10,000 plus data points that we pull to assess somebody's creditworthiness. I guess you could say we generate our own proprietary credit score, but what I would also say is AI is a big idea, big concept, and there are different types of AI use cases. So we primarily use machine learning, which is kind of the more old-fashioned, kind of boring version of it, to really automate tasks or to take data and train our algorithm on it so it practices. We don't send an algorithm out into the wild untested. And I would give our friends and counterparts at Wells and Citi for being very sophisticated in their use of AI as well. It's not just the fintech companies, and we're not doing it just to find new ways to say yes. We're all using it to lower our cost structure so we can lower the pricing on our products. I would say definitely we're using AI as well. But I would also say that the larger banks are also quite sophisticated in their use of AI.
Okay. Was there any other answer? Anybody else want to contribute? No? Okay. I think that we're going to wrap it up. So join me in applause for our panelists. Thank you so much. We've got information on where to look up some additional policy discussions. I'm sure the panelists can stick around for a few more minutes if you have some individual questions. And I'm going to pass it on to Nicole to do the formal thank you and wrap it up.
Thank you so much.
Thank you.
All right, thank you, Marianne, and thank you everyone in our panel for joining us today. I once again encourage you all to please share what you learned today. Take your learning home with you with Catch Skills. Remember to scan the QR code on the, it would be your right side of the room here, so that you can track what you learned at today's program. Thanks again to our moderator and panelists. It is also important that we share the good work that these organizations and companies are doing for the community. If you're interested in energy, please stick around and join us in a couple of minutes. We will have our public policy briefing on shaping the future of energy beginning shortly. In the meantime, we have light beverages and refreshments outside of the room here. So if you want to freshen up a little bit, you can do that as well. If not, then this concludes our program. Thank you and have a great afternoon, everyone.